Hey there, folks. Happy Saturday to you. Hope you're having a fantastic weekend. Got a couple of videos coming at you this week, one on the markets and one on stocks to watch for next week. I got to tell you, I am not smart enough to understand the implications of everything that's going on around the world and how this will end. I can only tell you that for right now, things have been amazing to the upside, right? So we ended our quantitative easing here, which could have given everybody the feeling that maybe our markets were going to take a pause, pull back a little bit, digest the fact that interest rates will be rising in the near term, and boom, we get an announcement overnight, surprise announcement from Japan that they are going to put the pedal to the metal with their quantitative easing program, and they're going to be buying, ETFs, foreign ETFs, and stocks and so forth and so on. So all of a sudden, quantitative easing is back, just coming from a different area. Um, this rally that we've had is unbelievably strong, and I think for the long term we are probably going higher. I think in the short term it would be beneficial for us to have a pullback of some sort and maybe close some of these gaps that we've created. And I mean, this is something that you do not see very often in indexes. I mean, look at the NASDAQ. We got one, two, three fairly sizable gaps to fill. And I think, we may not fill them all, but I think that we will try to fill a couple of them. And I think that we moved way too far too fast. We've had some, short squeezes occur. Just watching CNBC and Bloomberg, there are a lot of people out there that did not, they anticipated that we would have a snapback. They did not anticipate that it would be uh, this hard, this strong, and we would move this far, this fast in such a short period of time. So caught a lot of people off guard. The question is now, can this continue, or do we actually consolidate, base, pull back, test some levels of support before we take the next leg higher? And I hope that that is what we see. So, Saturday or Friday we had the gap up, and I didn't do anything in day trades, primarily because of the fact that gap up days are just not good days for me when it comes to day trading. I know that, I've learned that, and I have no problem sitting on the sidelines and just kind of taking everything in. One of the things that I did do, though, is I went through my swing and long-term hold uh, account, and I trimmed some positions. I booked profit. Taser, Yahoo, Loco. I just booked profit and built cash because in my mind, I'm thinking that we are probably going to get some type of a pullback, or I think it would be healthy for that to happen. Look, things may continue to rip to the upside. I didn't sell my entire positions. I kept some, but I wanted to lock in some gains and book profits. So one of the things that did catch my eye on Friday was the IBB. We went up, we tested the $300 holla. We are near the top of the channel that the IBB had been trading in for quite a while. Near testing that, we're pretty far away from the moving averages. I mean, look how far we are away from the 200-day moving average. Stochastics cross to the downside. Actually looks like, we had a little bit of distribution here, a little distribution here. And I'm thinking that, maybe this bad boy can come back down and test what was formerly resistance in this 280 area. Test it and see if now it serves as support, or potentially come all the way down and close this gap that was created on the IBB and test this trend line of the channel. So if that were to happen, I would be looking to take BIS. If the IBB really rolls over, I'll look to take the BIS just for a day trade. I don't plan on holding it overnight, but I would be interested in taking it for a day trade. I think IBB rolls over, I think come back up and test the 1125 area. So, you looking at the Nasdaq. I mean, what's interesting is if you look at the weekly, it actually looks as though we've got some more upside, right? We could be see a little bit more upside in the Nasdaq, and it's actually that way for a lot of the indexes. The weekly looks actually as though we could have still some more upside, but the dailies are looking a bit extended. So for the short term, it would be good to see us consolidate, good to see a pullback um, before we try to make another run higher. So let's take a look. But we're coming into the end of the year, right? And small caps tend to do better into the end of the year than large caps. And if you look at what happened with the IWM on Friday, we gapped up pretty hard right into resistance. What I find interesting about the IWM is that you look at the Russell. So on the IWM, let's take a look at this here. We're right into this resistance of this trend line, right? Then if you go to the Russell, we actually gapped up above the trend line, right? But and nearly completely out of the upper Bollinger Band. Now we've got this gap. Uh, it'll be interesting to see if we fill this gap next week. SMH, same thing. So this is kind of interesting to me as well, right? We came right up into the 50. What's that? The 50 EMA. Oh, that's the 50 SMA. Came right up into it, and then we sold off on Thursday, and then Friday we gapped up above the resistance, right into this top trend line of this channel that the SMH was trading in. Stochastic cross to the downside. It'd be interesting if we fill this gap or if we power through and keep running with the SMH. But I would be careful in that area. Social actually looks like okay, it's crossed to the upside. It gapped up. What's interesting though is if you look at Twitter, you look at Facebook, not looking. I mean, the charts don't look all that great, especially on Twitter. But maybe we get some kind of a bounce and follow through. I think LinkedIn reported they did fairly well. So social actually looks like it wants to go higher, and maybe it does go up into these moving averages and then pull back, maybe come back to fill that gap. But interesting, keep an eye on social. S&P 500, at highs, still within the Bollinger Band, overbought, but looks as though maybe it could potentially continue to go higher. Stocks over the 40 PMA, gapped up, coming up into resistance right here at 65.90. It'll be interesting to see if that acts as resistance and we pull back, or if it powers through. Volatility basically is dropped. TIVX is back down to near 52-week lows. Volatility is just kind of falling off the map. And it'll be interesting to see what happens with that next week. Home builders, coming right up into resistance, coming up into this trend line, up into the 200-day simple moving average, stochastics across to the downside. I think I probably would avoid the home builders in this area. XLE energy kind of looks to me as though maybe it's found its bottom. I know that there's a lot of people. I mean, you've got hedge funds. Goldman Sachs just lowered, the price per barrel to I think $75, and then everybody else started jumping on the bandwagon. You had some people saying they're going down to 60. I think Dennis Gartman said it was going to go to 10 eventually someday. Pretty interesting stuff. But oil is actually kind of looking to me like it bottomed. It's now building a base, and it's found its area of support. And we'll see if that is the case moving forward. Financials, we ended the quantitative easing, which indicates that we're going to start raising interest rates in the near term, which is better for banks. So financials actually acting pretty good, even though Citi came out and had to adjust their third quarter results because of more fines or more whatever coming from Department of Justice. So interesting stuff going on there. But it does look like it's kind of overbought. It's got gap to fill. It's got a couple of gaps to fill. So I would be cautious in the financials. Let's take a look at what did I miss? Oh, I know exactly what I missed. Gold and silver. So I'm seeing people out there suggest that gold and silver, I don't know, I guess is going to zero. There is no value in gold and silver anymore. What's funny is, it's not really funny, but I've seen these guys out there for over the last several years that, are just fear mongers and talking about how, the market is going to go to zero or, going to crash and there's going to be martial law and, gold is where you need to put your dollars and, because the end of the world is coming and oil is going to be ridiculously priced and man, and they sell those videos to the people to, prepare for the the crash that's coming and how to protect yourself. And anybody that bought those things, man, I feel so sorry for those people. Gold is just getting crushed, and silver, you know, commodities in general have gotten annihilated. So, I know that there's people that are suggesting that these are going to go much lower. However, I have to tell you that these are on my radar. What I'm thinking is, just like we had that vicious snapback in the markets, I do believe at some point we are going to get a vicious snapback in commodities. We are going to get a vicious snapback in gold, in silver, and the miners. And I don't know when that's going to happen, but I will tell you that it is definitely on my radar for a day trade. Um, you know, maybe next week, maybe the week after that, but at some point you're going to get a vicious snapback in gold and silver because I don't think that they're going to zero. I think there's going to be opportunity there, and I think it's worth keeping it on your radar. So listen, folks. In general, my thoughts are that we are probably closer to the top in the near term. We need to consolidate. We need to pull back. I think that would be good. I think it would be healthy. If this thing continues to power higher, that's great. There will be opportunities to trade. I just think that means that eventually, the drop will be that much harder and that much more severe if we just, it's not the run that we are experiencing is just not sustainable in my mind. So be careful out there. If you have profits in your long term and swing accounts, don't be afraid to book some. Not telling you to sell it all and go all to cash, but I am suggesting that you book some profits and look for opportunities. Start building a watch list of stocks that you'd like to buy on sale because nothing is we're not just gonna continue to go straight up. At least that's what I think. I could be wrong. Maybe the stock market's gonna go, to maybe the S&P is gonna go to 3,000 and the Nasdaq's gonna go to 10,000 and the Dow's gonna go to who knows. But I would be cautious up here after this run we've had, and that's it. I will. Be back later with stocks to watch for next week. Enjoy the rest of your day, and I'll see you in a little bit.